Hey guys, can you hear me?
Hiya,
Hello.
Brent. Yeah, we can hear
Hello.
you.
Okay.
Okay, so once Steve stops sharing after this
Let me
number,
do it. Yeah, no problem. I'm gonna tell you
uh,
the number. It's okay.
okay.
He can go ahead and
So,
share.
so Brent, there's a green box for sharing your screen. It's a drop-down menu, and you click that, and then we'll be able to see what you're looking at.
Okay, I really don't need to share my screen today. It pretty
Oh,
much
okay.
just
All right. Well,
going
then
over
I
here.
will, so I could at least cover some of the things that you're talking about. And
Sure.
okay, so. I was going to second screen it. Why don't we start here? Why don't you tell us a little bit about your journey into the trading industry and how it began for you and what you may have been doing before that?
Sure. So I basically have a background of just being an individual who was incredibly interested in markets and wanted to explore that further from a pretty young age. And so I think I remember in high school, I had a teacher who was talking about this guy named Alan Greenspan, and he
Yeah,
started
the
getting into
maestro.
Federal Reserve stuff, the maestro, yeah, all that. So I started getting interested, and I placed a few trades during college. I think my first trade was in a May cotton futures contract, and I had absolutely no idea what I was doing at the time, but I'd kind of taken some courses, read up on things.
Was it a winner? Your
You
first
know,
trade?
it was a winner, but my second trade was not because I
Well,
took.
I'm just saying there was a superstition on the floor at the Merc that if your first trade was a winner, it was bad luck.
Yeah, well, it was
Just a
definitely bad luck
superstition.
for the next trade. So,
Mine was, but the bad luck only lasted, I don't know, 30, 40 years. So anyway, Brent, so you know what I'm interested in is you were
don't
born here
curse
in
me
the
out.
States. What was the attraction to move to the Netherlands?
Yeah, that's a good question, and part of it actually does have to do with the time zone of being a
Okay,
forex trader.
you want to
And
trade Europe.
yeah, I think the time zone's better over here, especially for somebody who doesn't love getting up at 5 in the morning every day in Colorado, like I did for so many years. But besides that, I do like the personal and cultural aspect of being. You kind of feel like you're in more of a central location for traveling and just getting a taste of more of the world, I'd say, than North America. So
But how
I
did you
made
choose? I mean, there are a lot of places in the world. I'm just curious on the attraction of Netherlands
Well,
besides
part of
time
it
zone.
was,
You know.
yeah, part of it was as an American, there's kind of a neat program to get a visa if you start a business here.
Oh, I see.
So
Okay.
Japanese and Americans can come to the Netherlands and start a business relatively easy. At least when I came, I don't know if the rules have changed in the last couple of years, but
Okay.
you have to prove an income to stay longer than 2 years, but it'll get you in the door.
Okay. Interesting. So that's an and were there tax advantages?
Um, Not necessarily, but I suppose on from a trading perspective, your individual funds are not necessarily taxed based on capital gains. They take your balance every January 1st,
Mm-hmm.
and they tax like roughly 1.5 to 2% of all of
Of
your
your.
funds. Yeah,
Oh,
the whole lot.
interesting.
So
So
it
that's
can
an
kind of work out
advantage.
in your favor if you have capital gains, but you still have to
Yeah.
pay that if you have losses. So
Okay. All right. Okay. Interesting. So, did you have any mentors or people that influenced you that helped you along the way, or showed you a new paradigm? And I believe technical trading's one thing, but most of this is in our head. It's a lot of it is psychology.
no,
What do you think?
certainly. I did some courses with Larry Williams and Jake Bernstein and read up on some other stuff. And I think I kind of got acclimated to markets over a few years in really diving into the technicals. But over time, I found that more of a kind of a well-rounded approach where I'm looking at, everything that I believe will drive price over a certain period of time, the duration of the trade, including technicals, including fundamentals. And then the thing that I really added in to the repertoire eventually was liquidity from central banks and fiscal policy, potentially from governments, things like that. That's pretty instrumental to my trading these days.
Okay,
so I try to tie it all together. And as far as where did I get the ideas for this stuff? Just like you guys, I've just been around markets, reading everything I can, trying to improve myself. And I just kind of found that place, that happy place that worked for me after enough time and getting hit in the head enough times that you kind of learn from some of your mistakes. But I'm still
with all of the tools that you have in your toolbox, what's your narrative for the dollar here in 2020?
So I was pretty constructive the dollar last year. I was bullish the dollar and also bullish gold, which is kind of odd bedfellows. But around the turn of the year, really, I started to sour a bit on the dollar. And I think there's pretty much a lasting catalyst that we have here, a series of catalysts that are going to continue to drive the dollar lower. It might get, it might kind of remain buoyant with some risk on or risk off haven flows during this coronavirus episode against some, in some pairs. But I'm really seeing some say political and budgetary matters coming into play really soon.
Which are?
So the Fed balance sheet has quietly plateaued recently around $4.15 trillion after rising $400 billion in less than 4 months. And the dollar found some footing around the same time that the balance sheet plateaued, even before the worst coronavirus headlines started triggering flows into the usual suspect funding currencies, yen, Swissy, euro, and whatnot. But I think going forward, is it really going to be the coronavirus that we're talking about in 3 to 6 months? And I sure hope not, for the human toll and everything involved. But I think the U.S. Democratic primary elections could prove to be kind of an immediate negative catalyst for USD, because it'll bring the budgetary picture into perspective pretty soon. And no matter who gets elected, my view is that it's going to be a regime that's going to be pushing for fiscal expansion in the U.S. And I think it's going to happen in the U.S. before it would happen in Europe. And I think Germany is going to be pretty reluctant to have the EU follow course with something like helicopter money, MMT, that kind of thing.
So is Euro 110.60 a good value?
In my view, it is a good value.
Well, you're who I'm talking to.
Yeah, well,
okay.
A lot of people disagree, but talking
right.
6 to 18 month time period, which is kind of what I like to analyze, is it's a screaming buy for me.
Okay, a screaming buy. Okay. What do you do about risk management when you have a fundamental narrative like that? Would you say you just scale in, like from here down to 108 if we get another pop in the dollar, or do you start to rely more heavily on your technicals, and from what time frame do you make these decisions?
The risk management is really the crux of how I would go about a position like long Euro USD, because I like to dabble in kind of small positions and getting the best price I can, on dips. I'm not one to seek the technical confirmation that a lot of other traders do. Sometimes I just dip in, but it's with small size.
Mhm.
and I'll see how that goes. And, you know, I always have my levels where I will add as long as add to the position as, you know, say it falls in this case, as long as the overall narrative is intact. So
Okay, and with your negative dollar outlook, what's your favorite long against the dollar?
So my favorite long against the dollar would be actually commodity currencies, but not yet. So
Okay.
as we have kind of this big coronavirus and global growth slowdown and really just a risk off scare, and we're not really sure how it's going to turn out. I'm not going to be wanting to pile into commodity currencies right now while they're, you know, falling off a cliff. But
Okay, well,
once we start seeing some
let me
stability
ask
there,
you this. I'm showing Aussie.
I'm
Can
going
you
to be
see my chart?
taking a look. Okay.
Okay, so here we are in the Aussie, about to make new weekly lows for quite some time.
Mm-hmm.
And here we have the Kiwi well above those lows. So they're both commodity currencies, Kiwi showing relative strength. What would be your preferred long between Aussie and Kiwi? Or would it be Canada?
Well, out of those you mentioned, definitely
Well,
Kiwi.
those are the
I like the
commodity
relative
currencies.
strength. Yeah.
Yeah.
You could also take a look at the Mexican peso.
Oh,
and
yeah.
then,
Yeah. You like it?
And then at this moment, I don't. But
Okay.
once the risk narrative kind of levels out, and you're talking about fiscal expansion policies and more stimulus on the fiscal side of things, which is what everybody is kind of opining for right now, I think the EM currencies will be set to surge. I'm more of a G10 currency trader than the EMs,
Okay.
but I would take a look at some equities that are priced in and denominated in EMs in the future.
In what?
In emerging market currencies such
Okay.
as the Mexican peso or potentially even like the Colombian peso if you want to get exotic. I don't tend to get very exotic.
Well, Shakira certainly is.
that is
You
a
can't
fact.
get any more exotic than that, brother.
You're not going to get me on the other side of that trade.
Okay. So you're talking about what fiscal stimulus. So to me, that couldn't happen any earlier than a year from now, right? Because that's not going to happen during an election year here in the U.S. Do you think?
I think you're correct on the technicality of when it would happen, but as far as when it would start impacting markets, I think it would happen when the probabilities of said policies taking place would start getting baked into the cake.
And what would that be? A Trump re-election, or there's going to be a spend on infrastructure on the other side? What's your outlook on this election?
Yeah, no, I think Q4 of this year, if not, then Q1 of 2021, you're probably going to start seeing some plans, trotted out with fiscal expansion, and potentially financed in part by the Fed, and that's if we make it that long. Before then, there could be some increased balance sheet movement on the Fed side just to kind of keep things stable this year.
Okay.
And the money has to go somewhere, Dale. I mean, when they're creating, that much money, part of my job is to figure out where it's going to end up, because it doesn't always end up in the same place. It's not always going to go to commodities or gold, but I think gold is definitely going to be a benefactor going forward, but you don't want to pile in, after a spike, jumping into momentum if that's not your strategy, and that tends to not be my strategy. But I am constructive on gold as much as anything, on dips.
Okay. Over silver?
Yeah, the thing with silver is that it has the the industrial use aspect that's kind of been dragging it down relative to gold. So if you want just more of a pure precious metal play that's just kind of on the other side of all fiat currencies, it's gold. But I do like silver. I'm in both, but I'm more confident in gold.
Okay, and any view on energy, or even more importantly, yields? 10-year looks like it's about to challenge all-time lows. Yields work their way into your equation for your outlook on asset classes?
Yeah, as far as treasury trading or just trading in fixed income space at all, to me it's somewhat of a no-win situation, because I think the yields are low enough that they're negative real yields pretty much across the board out to pretty long duration. And so I don't want to be long treasuries unless it's just a short risk off type of a play. And getting short treasuries is going to get your knees chops off if the fiscal authorities come in and cap yields, or the monetary authorities, as has been discussed recently.
Okay.
So I think we're looking at the potential for yield curve control to some degree within the next, say, 12 to 24 months.
Okay, and that control, the Fed would obviously like to see steepening rather than inversion. You think they'll be successful?
I think they'll steepen the curve, certainly.
Okay.
The question is, at that point, you could have some pretty deeply negative real yields. If you're pinning the 10-year Treasury at, say, 2 to 2.5%, and the balance sheet starts climbing to maybe 6 or 7 trillion, you're probably looking at some, a deeply negative real yield at that point. So I don't really want to be long, but you can't be short because the interventions are on the other side of that. So I'm not really personally all that interested in trading treasuries for the moment. Crude oil, definitely. If you watch the price action on crude last Friday, it seemed to be wanting to find a temporary base in the 51 to 52 per barrel range, even as the S&P 500 continued to drive lower close to the close. So there was some relative strength, and part of that might have been USD base, and part of it might have been the OPEC jawboning about bringing forward the meeting, the OPEC meeting, and potentially cutting by up to 500,000 barrels per day to take that out of the market. Because right now China is consuming 3 million barrels less per day. No surprise there. And
so you like these levels to accumulate, and we've had about a $15-16 decline from the Iranian retaliatory strike in Iraq. Is this just going to be a bear market rally, or oil shares have really been decimated over the last few years? Do you think it's an investment or a trade?
Oh, definitely just a trade. I'm with you, Dale, on that. I don't think
everything's just a trade now, isn't it, Brent?
Take off unless the dollar just gets, obliterated. But I think we're close to levels where we could start finding a strong risk reward from the long side if things calm down a little bit. So in terms of the risk management that you were talking about, I would start to take maybe small positions at 51. I would probably add a little bit at 46 to 47, as long as we're seeing not a complete, contagion spreading everywhere and things are getting worse, because some of that's already priced in. Some of the uncertainties there. It's just we're not sure yet how that will pan out.
Okay, well, Brent, here's your Twitter icon and picture of you. What's your business model, and are you looking for people to follow you on Twitter? Why are you on social media? I know you have a fund that only accepts credited investors. So what's your purpose for being on social media?
I think as much as anything, it's just, you know, like with ForexAnalytix, it's just a community to share ideas and get information.
Mm-hmm.
And for me, it started out a lot less promotional, and it was just more about information sharing.
Okay.
So,
Because
you
you
know,
were lonely. Go ahead, say it.
yeah, I know. I mean,
Are you lonely,
it's a
buddy?
lone wolf career at times. You
What are
know?
the women like in the Netherlands?
Well, I don't know. Ask my wife.
Is she from there?
No, she's not.
Oh,
She's
you
more
both came from Colorado? Okay.
Yeah, yeah.
All right. Well,
Wife and
anyway,
dogs.
very diplomatic answer. Whoever wins the next election, I'm going to recommend you to be the ambassador, ambassador to the Netherlands, because that was a great answer. And
Well,
you're,
it's a wonderful country, and I
yeah,
love all of my you know, friends and family in the States, and I'll be back this year for probably 2 or 3 weeks.
that's probably the hard
For
part, right? Being so far away from your family.
Oh yeah, that's by far the worst part is,
Yeah,
you know, especially when something big is going on in a family member or friend's
yeah,
life that you want to be there for, and
yeah,
so that's tough.
yeah.
There are a lot of good things about living overseas, but that's definitely the big downside.
All right, buddy. Well, it's a pleasure meeting you, and you're now one of my trading warrior brothers for being able to survive an interview with me.
Hey, Dale, it wasn't too bad.
All right, buddy. Good
It was
hunting.
great talking with you. Yeah, I
Yeah, I
wish
hope
you
you
happy
have
pips.
a fantastic 2020, and just like the water flowing. What's the name of that river there in Amsterdam on your Twitter thing?
Oh,
What do they call
the
that?
Amstel
Okay.
River.
Okay.
Yeah, it's
So I hope
beautiful.
pips flow into your account like the Amstel River.
Hey, I'll take them when I can get them. Thanks
All
so
right,
much, and I
buddy.
wish the same for you.
Everyone that's Brent Carlisle's been with us, and you could follow him on Twitter at Brent Carlisle FX. We'll see everyone for Turnaround Tuesday tomorrow. And remember, most of all, don't just count your pips, count your blessings. Adios. Thanks again, Brent. And we'll see everyone tomorrow. Adios.